All right, welcome back everybody to Altcoin Daily, where you subscribe because you're interested in making money in cryptocurrency. My name's Austin. In today's video, I want to share with you the latest altcoin news like this, and like this right now. So check the timestamps down below in the description and let's jump in, starting with Bitcoin. BlackRock, the world's largest asset manager in the world, with some $7-8 trillion in assets under management, is reporting that they have dabbled/are dabbling into Bitcoin. What the hell do you think is going to happen next as all these corporate entities start to dip their toe in? Let me share with you this clip from this morning of Chief Investment Officer for BlackRock, Rick Rider, making the announcement that they are officially dabbling into Bitcoin. And while he refuses at this time to give an official recommendation in terms of 1%, 5%, what a company should allocate into Bitcoin, pay attention to his coy little smile as he talks about BlackRock's involvement into BTC. Watch this. Let me know what you think.
Just trying to do the math. People think I can't do math. I'm pretty good at math, scientific notation, everything. So where's Larry comes in? He loves to brag. What's your how much you got under management now at BlackRock? What is it? 7, 8, something like that. It just keeps going up.
Yeah.
What is it? Because you manage it so well. What is it?
Yeah, no, it's I watch what I have to do all day.
It's up
so
there.
I'm managing about two.
It doesn't matter.
It's up there.
So Bitcoin bulls say 1%. Even just as a hedge against money printing, put 1% into Bitcoin. I'm trying to figure out what 1% of 7 trillion would mean for Bitcoin. That would be. What are you doing? Are you doing anything? Are you recommending anything? What's BlackRock got in the works for Bitcoin? Or
yeah,
go ahead.
Yeah, I mean, I think crypto is generally has gotten the imagination of a lot of people. I mean, having today the volatility of it is extraordinary. But listen, people are looking for storehouses of value. People are looking for places that could appreciate, under the assumption that inflation moves higher and the debts are building. So we've started to dabble a bit into it, and I wouldn't put a number on the percentage allocation one should have. It depends on what the rest of your portfolio looks like. But listen, I think you talked about one of your shows. My sense is the technology has evolved and the regulations have evolved to the point where a number of people find that it should be part of the portfolio, and so that's what's driving the price up.
Can you speak to BlackRock's eventual plans? What would you be recommending? You're not as old as Mellon. You got a lot more money, but that's one of the oldest banks around. They saw fit to make a comment. What do you think will happen down the road?
So, I mean, I'm not in a position to make a recommendation on that. And so, listen, I think some people holding it as a storehouse of value and diversifying your portfolio. Listen, the one thing I've owned, and I think somebody said on one of the show I was on with you guys recently, we're holding a lot more cash than we've held historically. It's because duration doesn't work, interest rates don't work as a hedge, and so diversifying into other assets makes some sense. And so, holding some portion of what you hold in cash and things like crypto is, seems to make some sense to me. But I wouldn't espouse a certain allocation or target holding.
Wow. Thoughts on this? In my opinion, do not take disclosures like this for granted. This has major implications for the space. Even Tesla, who invested $1.5 billion last week, Tesla is now up over $750 million on their Bitcoin investment, outperforming their entire 2020 earnings of $721 million. So even if Bitcoin doesn't move for the rest of the year, just ranges sideways around $50,000, Tesla's already up. They have already outperformed what they did last year. That is the FOMO. That is sort of the asymmetrical upside that BlackRock, that Tesla, that these corporate entities are seeing. In fact, breaking news, MicroStrategy has just adjusted its planned convertible senior note sale from $600 million to now $900 million, all of which will be used to buy more Bitcoin. I'm not a financial advisor, but things like this tell me that Bitcoin will not stay at only $50,000 per BTC for long. It won't. It just can't with all these corporate entities FOMOing in. The minute I get more news involving Bitcoin, I will make a video. I will keep you updated, but let's keep moving. Talk about some altcoins, starting with Cardano. Big news. Being reported right out of Yahoo Finance today, DNA.Tax is officially making the switch from Ethereum to Cardano to convert their Ethereum Solidity-based smart contracts to Cardano's Goguen smart contracts. By the way, we have touched on this news before. Today, I want to dive a little deeper. DNA Brands Inc. and Santo Mining Corp., or Santo Blockchain Labs, owners and developers of DNA.Tax announced today they are making the switch. Now, what is this company's relationship to Ethereum right now? Santo Blockchain Labs has been developing and deploying Ethereum Solidity smart contracts for over 4 years now, with experience in ERC20, ERC721, ERC1155, and ERC1450. So they know their stuff when it comes to deploying on Ethereum. And the company has evaluated the long-term economics and technology benefits and has determined to move all its blockchain projects from Ethereum to Cardano's Goguen. And besides more scalability / less congestion, why the move? Well, unlike Ethereum, Cardano uses a mechanism that handles the tokenization natively on the ledger instead of via smart contracts. So there are no Cardano ERC20s or Cardano ERC1450s. It's just on the chain itself, making all tokens in the Cardano blockchain follow the same logic and be inherently supported, instead of requiring the creation of layers, as is the case for ERC20 and ERC721 tokens. And not many people talk about that, how the mechanics of Cardano are aiming to be way better than the mechanics of Ethereum for dApps involved. This will ensure scalability, performance, and reduced transaction costs, also known as gas fees in the Ethereum world, which lately are extraordinarily high and slowing down the transactions on the Ethereum network. And because of this, DNA.Tax will be one of the first dApps on Cardano. DNA.Tax's prime directive is the authentication of products to ensure the consumer of its authenticity, so very similar to what VeChain is providing on their chain. There is also a secondary component for DNA.Tax, which will be the coupon rewards module, where users will have the ability to earn DNA rewards native tokens as they scan products to ensure their authenticity. These DNA rewards will inter-exchange with other coupon reward systems or can be converted to the native Cardano ADA cryptocurrency. Now, Ethereum and the ecosystem of dApps around Ethereum is still king, but I would suspect we're going to see more headlines like this and more headlines like this with Polkadot as we get some spillover with dApps that don't want to really mess with the high congestion of Ethereum. Give me your thoughts down below. As I get more information, I will make a video. I will keep you updated. I do want to take 45 seconds and mention sponsor of the channel, CryptoTrader.Tax, a very easy way to get your cryptocurrency taxes done. They automate the entire process. It takes less than 5 minutes. I used them last year. I will be using them this year. If you just search Cryptocurrency Taxes 2021, you'll see a 6-minute walkthrough / guide where I take you through the platform. I will link this down below, so whether you use Coinbase, Binance, Uniswap, it works for all exchanges. And by the way, only for you, if you are an Altcoin Daily audience member, every week CryptoTrader.Tax is giving away a free cryptocurrency tax report. Just enter the contest, enter the giveaway down below. I will link this down below in the description. And for everybody else, feel free to use my promo code Altcoin Daily for 20% off. Check it out. Next piece of DeFi news, Bitwise's new fund lets institutions get exposure to DeFi. This opens today. I want to keep you informed. Some of the biggest names in the decentralized finance space are included in Bitwise's new index fund, including Compound, Uniswap, and Maker. So this is some great exposure and now another major on-ramp where institutions can put some money into Uniswap token or Compound token. And previously, Bitwise launched a crypto fund focused on the top 10 cryptocurrencies, but this new fund will enable institutional investors to access the wider and more experimental DeFi market. And if successful, it could drastically encourage institutional awareness of the industry. So if you hold Uniswap token or Aave or Compound or any of those blue chip DeFi cryptos, you should feel good. You should feel bullish. The two largest constituents of the index are Aave and Synthetix, which both carry a weight of 20%. There's also Year in Finance and Compound and Maker, as we said. Good stuff. And next piece of altcoin news. An Elon Musk Cybertruck has been spotted in Decentraland. Now, to me, it's unclear whether this is Elon or not. It easily could have been somebody who just created their own Cybertruck-looking vehicle. But take this as a reminder that digital real estate right now is being worked on. And it's cool to see what people are building or buying in Decentraland right now. Well, let me know if you're a gamer involved in Decentraland, and what do you like about it? Are your friends, are people getting into Decentraland? Let me know. Okay, that is the video. My name's Austin. See you tomorrow.